all, I'm Sarah Bumgardner with AAFMAA, the American Armed Forces Mutual Aid Association. Since 1879, we have been serving our military community, and our mission is to be the premier provider of financial solutions for the armed forces. And as a director of partnership and member engagement, I talk with other nonprofit organizations about what they are doing to help our service members, their spouses, families, and the veteran community at large. And today we are talking about how to optimize your VA home loan. I have Kevin Crooks Jr. here, who is the Business Development Manager for AAFMAA Mortgage Services. He grew up in Jacksonville, North Carolina with a Marine Corps warrant officer father, so he understands firsthand the commitment and sacrifices made by military families. He has been in the mortgage industry for 15 years, and today he's going to tell us everything we need to know about how to optimize that VA home loan. Thank you so much, Kevin, for being here today.
Yeah, thanks for having me. Glad to be here.
Yeah, so let's start with our kind of first question so everybody can level set when they're listening to this or watching this. Who is eligible for the VA home loan?
Yeah, and a lot of that, the primary driving factors for that are when you served and then for how long you served. If you happen to serve during a time of war, then you just need 90 days of consecutive service. You don't necessarily have to be in the active war zone, just have served during that time. And then if your time was, during peacetime, the requirement bumps up to 181 days, or just over 6 months, basically, worth of service. There's also requirements, 6 years service requirements for National Guard and reserves. And then there's this last one I would like to highlight. It is if you're a spouse of a service, so we get these kind of questions a lot, but if you're the spouse of a service member who died while service or due to a service-related disability. And that's kind of changed over my career. Initially, the only surviving spouses that were eligible were, unfortunately, those that were, killed in action, or had like a service-related death, an accident or something of that nature. Since then, they've expanded that eligibility to that verbiage that says service-related disability. And to the best of my knowledge, what that means is when the service member passes, if he or she has 100% disability rating, then their surviving spouse would qualify and get the VA loan. Because the VA loan is the one thing that's kind of unique that doesn't transfer to the surviving spouse. It's namely associated to the veteran. But, even if that service member, passed at the ripe old age of 95, if they were 100% disabled at that time, it's considered their death is considered due to a service-related disability, and their spouse would be eligible for the VA loan benefits. So that's something for folks to keep in mind.
That's great. So it sounds like there's kind of a couple of variables with this. For those of you that are watching at a computer or on your phone, you're going to see this slide deck up here that maps all that out. And for those of you who are just listening, you can always, come back to this at a later date and view these slides to be able to see and outline really clearly who is eligible. But one of the takeaways is, if you are not certain if you're eligible, is to give somebody like Kevin a call, and they will let you know if they can help you with the VA home loan and if you meet eligibility. So that's a great place to start. Now,
yeah.
And
I'm sorry, Sarah, I was just going to say to that point, we have access to the VA's website, so we can usually pull certificate of eligibilities that shows your entitlement directly from the VA in a matter of moments. And for those that, for record keeping, some of the older service members, they don't pop up automatically. We can usually, with a copy of a DD-214, we can usually receive the certificate of eligibility from the VA in a few days, and then we know exactly what someone qualifies for.
Yeah, that's great. And there's actually a question. I'm going to take a pause right now because we have a question that just came in from Eduardo, who said, can you help a surviving spouse to find out if she is eligible for a VA home loan? And it sounds like you can, right?
Yeah, they just have a couple different forms to fill out. They're equivalent of a DD-214, and then there's a separate a surviving spouse request for a certificate of eligibility. But yes, we are happy to accommodate those requests.
That's great. That's good news. So many people know that a VA home loan requires 0% down, right? That's one of the kind of big selling points on the VA home loan. But what if someone wants to put money down? What would their options be to try and optimize, right, our VA home loan?
Yeah, and that's a strategy we employ often because, a lot of times, you're kind of pigeonholed into thinking that if somebody is only getting a VA loan if they have little to no down payment.
Mm-hmm.
But due to the fact that the VA loans rates are usually considerably lower than their conventional counterparts, it can often still be the most advantageous product for somebody with oftentimes even a 20% down payment because of the lower rate. So namely what happens with additional funds down is the VA they don't charge monthly mortgage insurance, but they have a one-time upfront fee that they roll into your loan amount called the VA funding fee.
Mm-hmm.
And the first time you use that, the funding fee is 2.15%. It does go up if you're doing 100% financing. It does go up to 3.3% for all of your subsequent VA loans. But so you could see, and then with additional money down, with it as with at least 5% down, that funding fee, is cut almost in half from 3.3 if it's a second time use to 1.5, and then you do get a little bit more break with 10% down at 1.25%. So what's really common is we'll see folks that may be on their second home, their second purchase. They've sold one home, or maybe perhaps they're even keeping it, but typically they have sold the home. They have a little bit of proceeds. With as little as a 5% down payment, they can save, basically, over 1.5, 1.8% in funding fees. So, basically by taking $5,000 out of one pocket and putting it into the equity of your home, you can save yourself almost 3% in fees.
Wow.
So we'll use that a lot to help save those closing costs to the veteran.
Yeah, that's awesome. And you mentioned kind of something about having a home and then having to sell the home and you're moving, right? This happens a lot in PCS. I was a military spouse for 11 years, right? And constantly kind of buying homes, selling homes, moving. This is a great conversation to be having right now. PCS season will be upon us very soon, come around May, June time. So kind of understanding these funding fees, or at least having a conversation with somebody such as yourself, to be able to understand, what should I do if I do sell this home? What can I put towards another home and reduce and optimize that VA loan is something really great to be thinking about here, as well as kind of my next question, which led me right into it, is can you have more than one home under a VA home loan?
Yes, you can. And that's kind of, with unfortunately with the VA loan or any loan, really, there's always a lot of misinformation out there because unfortunately a lot of folks, they may have only had one or two real estate transactions 15 years ago. And we all remember those exactly perfectly. We remember every detail. But, things like the telephone game throughout the years, things kind of get transposed as they move along. But, basically, and this has changed over even my career. But, basically every service member or veteran has a certain allotment, what's called, full entitlement, which is basically now it's based off of 1/4 of the conforming loan limit. So this does get a little wonky, and I'll go through this example, but the takeaway here again is just to contact a professional such as ourselves, and we'd be happy to do these calculations for you.
Yeah.
But let's just say, for an example, that the first home you bought was a $350,000 purchase. You financed 100% of that. So that means, 1/4 of that loan amount is how much of your entitlement you use. Okay. So in this case, you would have used $87,500 of your entitlement. And then it changes every year or can change every year. So in 2024, the full entitlement is 1/4 of the conforming loan amount is $191,625,000. So if you take that full entitlement amount and subtract the 87,500 that's already used, then that means you have roughly a little over $140,000 of entitlement left. And what that means is whatever your entitlement number left is, you multiply that by 4, and then that's how much home you can finance at 100%. Because essentially what the VA loan does, your entitlement insures the lender for 25% of that loan amount. That's why the rates are better. It's seen as, a safer loan for the lenders, even more so than a conventional loan with 20% down, because, the lender actually has less exposure. So basically in that example, if we have 100, so that means that, if we have $104,125 of entitlement, that we could buy a house at 100% financing of up to $416,500. Now, keep in mind, this is without selling or paying off that, this is keeping your current home, as a rental or second home or whatever you want to do. And then, and a lot of people, it's confusing to say, okay, well, I can have entitlement up to 416,500, but I want to buy a $500,000 house. The natural thing is to think, oh my, I have to put up the difference. I have to put up 100% of that difference. Or in this case, which would be, $83,500. And that is not the case. Because the VA loan insures 25% of the purchase price, that's all the lender is looking for. So you essentially are self-insuring the difference. So whatever your entitlement, your max loan amount equals at 100%. If you go above and beyond that, you only have to put down 25% of the difference. So in this example, if you wanted to buy a $500,000 home, your entitlement left was, and I messed that up, is $416,000. That would leave you $83,500 gap. And then, you only need, as the borrower, only need to put down 25% of that difference, or a little over $20,000, which on a $500,000 home, that's less than 5%.
Yeah.
So, you'd essentially be able to have $850,000 worth of mortgages, and you'd only have to put $21,000 down on that second property. So it all depends on, the amount of entitlement that you have, and then, the purchase price of the new home. And then this even changes in some higher price counties in some areas. So it's definitely, this is just kind of some back of the envelope math. Yeah. But, this would be, just something for, the takeaway here is for you, the consumer, to know enough to know that this is an option, and to, to reach out to an expert for, for the calculations, and to determine, what you can finance at 100%, and then what your down payment may be at another price point.
Yeah, this is great. And I'm so glad that you went over this example, because I fully tracked what you were saying, fully understand that, I can own 2 homes, can put down a minimum amount of the percentage of both homes owned in cash that I need to put down. But I do know enough that I would ask for advice from somebody. So I would let you all do the calculations of this for me, and I would give you the information and say, okay, I'm going to purchase another home, and this is the value of the current home. You do all the back of the envelope math, and then let me know what I need to come up with. And that's kind of right. That's why you go to an expert. That's why you go to somebody, like AAFMAA Mortgage Advisors, because, we work exclusively with the military. This is, the bread and butter, what we understand and what we're here to help with. So that's wonderful that you're there to do that, Kevin. I appreciate that. I had a question come in about waiving a funding fee. Do you know anything about if you're disabled and you're receiving VA compensation, if you can have that VA funding fee waived?
Yeah, and that was part of our we were going to get to that, but it's a good question. And and I should have brought it up with the funding fees. So yeah, excellent. Yeah, if you, which from my understanding is the minimum, but if a service member has at least a 10% disability rating, then the VA waives that funding fee moving forward. The
Yes.
same thing also happens for active duty. This is a recent change over the last 10 years or so. If you're active duty but have been awarded a Purple Heart, then you're not responsible to pay the funding fee either.
Wow. So that's a great another benefit for those who are service connected or who have that Purple Heart. And again, I think one of the kind of larger takeaways as we're talking through this is there's so many different variables and there's so many different case specific things that you all can dive into with an individual and say, okay, let me go through everything that's happening with you and then figure out how do we optimize you and get you into the home that you want in the best way possible. So it leads me right to my next question, which is how do you optimize your kind of VA home loan?
Yeah, and we've touched on it through here. The main thing to optimize it is just to use it. I mean, it is far and away the best loan product out there. I mean, if it's from a down payment rate and monthly affordability standpoint, I mean, there really isn't much in the marketplace that can offer the advantages of the VA loan. I mean, it is a true benefit for those that have served our country. And the main thing is then again is just to seek advice from a proven expert. Somebody who's a subject matter expert in that field. Because, as I kind of mentioned before, there is a lot of misinformation in the marketplace. Things are always changing, with lending and the VA rules. And, and even like to our previous discussion about, the multiple loans with VA entitlement, like the VA has a rule like, you go into bonus entitlement when your purchase price is over $144,000. That figure's been around for 20 years. Hopefully that'll change. But like, because of that amount, like you could actually have two $350,000 VA mortgages, but you can't have $230,000 VA mortgages. Like you can basically only have one loan at that $144,000 purchase price or lower, which I get these days is probably like a wild goose chase in most markets. But that is weird. And it's because the VA loan is designed to help you out. And, it is a great benefit. But at the same time, it's not designed for somebody to have 7 rental properties that they've bought with the VA loan at $120,000 or whatever. So, there are some quirks and nuances there. So, yeah, it's definitely, to your best benefit to contact an expert, which I feel we're the best. Not only does AAFMAA have over 140 years of experience servicing the military, I'm almost up to 20 years now. And, it's in our DNA to take care of these folks. That is what we do day in and day out.
You do, and you do a great job. And there's another, we're getting some really great questions. There's another question in here about kind of misinformation that they had kind of been told you have to physically live in a home that you're purchased. So how could you have multiple homes if you aren't physically living in that home you bought with your VA home loan?
Yeah, I mean, you do have to physically live in the home when you're buying it. And then even like this is even if you're married and you're active duty, your spouse can satisfy the occupancy. So if one member, if the family wasn't going to relocate and wanted to stay or go to a different location, that the service member is going to be what we call a geo bachelor. The spouse can still satisfy the occupancy alone, with the family or whatnot. But basically what we're saying is when you sign a note on any primary residence loan, you always get a deal when it's the house you're going to live in. It's seen as a safer loan, across the board, because, in mortgages, they figure the least risky loan is going to be the house that you're living in.
Sure.
And basically when you sign that note, you're saying that you're going to live in that property for 12 months. Now, if you get orders or there's things that are beyond your control, there is some subjectivity to that. It's a hard rule, but it's not, it's not set in complete stone. But, so ideally the situation would be that somebody purchased a home, lived in it for at least 12 months or, maybe a few years or 3 years, and then got relocated from one duty station to another. Right. You necessarily don't have to sell the home in your current duty station to be able to buy a new one. And that's a great way I've seen a lot of service members through the years, both active duty and retired, that have helped build their wealth through that,
Yeah.
keeping instead of selling a home, keeping a home as a rental, which that's a whole other host of issues. But if that's what you choose to do, yeah, that's not this today. But if that's what you choose to do, you can, and and then move forward. So yeah, you do have to live in the time. You do have to live in the home the time that the loan is closed, and then basically you're saying that you intend to occupy that property for the next 12 months.
Yeah. And that's, again, right, one of the reasons why you go to an expert, you talk these things through, figure out if it's going to work, for you and your family. But, a lot of what I talk about too, and talk to our transitioning service members is how to build wealth, how to keep wealth. And one of the really great ways to do that is real estate. And so, this VA home loan gives you kind of an opportunity to be thinking ahead, right, to when I might be getting out of the service and what that looks like for my family and where potential income could come from, or, things of that nature. So I'm going to ask you one last question.
Sure.
And that is there a difference between how the VA home loan is used if you are active duty or if you're separated or retired from service?
Yeah, no, and like I said, we touched on this with the earlier question. The only real difference that I can think of is the funding fee. Is if you are separated, and it used to be the Purple Heart for active duty was, I think, was added in the last administration. So it's a fairly new concept.
Yeah.
But previously to that, the only way to be able to waive that funding fee was with your disability rating. One thing to keep in mind about that, though, and again, to the best of my knowledge, is if you start, because you can't finalize a VA disability claim until you're actually separated from service, but usually you'll start those claims before you get out. So if you started a VA claim, and we all know it takes time to process, but if you started a VA claim and then you bought a house, and I think that and because your claim isn't finalized, you would have to pay the funding fee.
Sure.
But if you're awarded that VA claim, that disability claim, within 12 months of purchasing that home, the VA treats that as basically like back benefits or back pay, and will go back and they'll cut a check to the lender for the funding fee. So you don't get the cash, but they will pay, you do get credit for that. Your funding fee should have been waived, and they'll actually pay down the principal balance of your current mortgage. So that's a way to kind of get that cart and the horse in line. You don't have to fully wait till you have your disability rating. If it's in the works, you will get credit for it eventually.
That's a great point. So that's a really great point, because I would never want to see somebody wait, right, to purchase a home or something like that, thinking I've got to get this VA claim done first, because we all know that going through VA disability claims takes time. It can take upwards of a year, right, to do. So you can be in your home and still get that benefit. Well, I want to thank you, Kevin, so much for all of the information, for answering all of the questions from our audience, and from walking us through how to optimize your VA home loan. I want to put back up here, yes, the slide that has all of Kevin's information. Again, if you are watching, you can take a screenshot of this. You save it for a later time to give him a call, or call the offices. If you are listening, you can always find this back on the LinkedIn profile, so you can get all of the contact information right there. And I really appreciate you talking with us today. We do have a small disclaimer, right, that just says these are kind of some of the places that we're able to help people purchase homes in. So when in doubt, just give them a call. So thank you, Kevin, for coming, answering the questions, and you've been a wealth of knowledge.
It's always a pleasure. Thanks for having me.
Yeah. Well, I'm Sarah Bumgardner, and that will wrap up our AAFMAA Live for today. If you would like more information about AAFMAA and financial readiness within the military community, you can always subscribe right here at the QR code on your screen. And otherwise, I thank you for joining today, and I hope you have a great day. Bye now.